Our next panel is going to address an issue that we have already brushed on in the previous panel, which is the issue of technology in alternative finance. And we're going to have quite a big focus on credit scoring and risk pricing and fighting fraud. So without further ado, I will ask the panelists to introduce themselves and their company, starting with, at last, one lady. Lizzie, you are named Lizzie or Elizabeth Chapman.
Thank you, Therese. I'm Lizzie Chapman, co-founder and CEO of ZestMoney. And ZestMoney is the largest and fastest growing consumer lending fintech in India. Our customers are very digital, very young, and extremely aspirational. They dream of owning the products that marketing companies are very good at selling to them, but they just don't have the incomes to match. So we provide bite-sized credit products in partnership with merchants, retailers, and brands from Samsung to Amazon to enable these customers to afford the products that we all take for granted. We were founded 2 years ago, and we are growing very fast. So we get applications of at least $50 million a month. And growing at 50% a month.
And we'll hear more in a few minutes about the specificities of the Indian market, which is very constrained. Matthias.
Hi, my name is Matthias. I'm one of the founders of a company called Billie, and Billie is providing working capital financing for small businesses in Germany and then later on across Europe. And Billie is actually not the first company that me and my team have founded. We have founded another company called ZenCap back in 2014, peer-to-peer lender for SME loans across continental Europe, which we then sold to Funding Circle in 2015. And from this experience, we've actually learned a lot about SME lending, about what parts of the business can and should be automated, which we are now taking over to our new business. And what we've also learned is that working capital financing seems to be one of the major pain points of these small businesses in Germany. The market for working capital financing is gigantic, just not for these small SMEs, and this is what we are trying to do with our product. It's an invoice financing product, so we are really financing the open invoices of small SMEs across Germany.
And the company, I don't know if you mentioned it, was founded just 1 or 2 years ago.
It's a very young company. We founded it actually about a year ago. The product is live for not even 12 months, so it's a pretty young company, but I can tell you a little bit more about it later.
Anish.
My name's Anish. I founded a company called Aire. We're focused on helping people who don't have a credit score to really justify their existence, to help them really get a score that is a little bit more accurate to their life. A lot of the customers we end up serving tend to be young, first-time borrowers. I know the word millennials get used a lot. I actually don't like that word, but that's the word that the market tends to put on these people. But they tend to be first-time professional, first-time borrowers, and their credit score doesn't quite add up to where they are in reality. We're based in the UK, and we're now rolling out in the US.
Maybe you can hold the microphone closer. Thank you.
So my name is Philippe Botteri. I'm with the global venture firm Accel. So we're investor in companies like Dropbox, Slack, Atlassian in France. We're investing in BlaBlaCar. And the firm started about 35 years ago in Silicon Valley, and that's where we have our roots and culture. We opened an office in Europe a bit less than 20 years ago, and we also have an office in India. So we're one of the very few early stage venture capital firm with a truly global network, and it is that network that we give to our portfolio company. And the typical investment that we do is a $5 to $20 million investment in a series A, B, or C, and we can also do a seed of $1 million, and we have a growth fund which enables us to follow the growth of our companies and invest up to $80 or $100 million. And we are very active in B2B and software, anything around consumer technologies, and also, of course, fintech and payments with investments like Funding Circle, World Remit, for example.
And Prosper, or in the origin?
And Prosper, and Go Cardless, and we have many others.
I'm mentioning Funding Circle and Prosper because it's the business of lending. And Now we have to turn to the question, the role of technology in alternative finance. And I will start with you, Lizzie. What are the key technologies in your business? And what do you do to serve these customers? You can explain the challenge also of serving consumers in India.
Yeah, I think that's a good place to start. Let me give you some numbers. You probably know India is a population of 1.3 billion people. What you might not know is that that's spread across 30 states, which have 22 languages, and completely different cultural and income characteristics. So it's a bit like building a lending model in 5 EUs, effectively, for one country. It's exciting, but it means that technology is absolutely critical. We had a very ambitious target from day one, which was to cover that entire country. So we wanted to be able to offer a loan to a customer living in a tiny village next to a big metropolis. And we wanted to offer him a loan at a 20 euro ticket size or a 2,000 euro ticket size. And we knew the only way we could deliver on that ambition was to build a completely automated and completely configurable back-end loan platform. And that's what we've delivered. The main way to measure, I guess, the success of that platform is the metrics, and not just how many loans we do or how many customers we have. But what we look at are things like how many times can we issue a loan per second? So we look at metrics like transactions per second. How many of our customers can take a loan from start to finish with 0 human interaction? And trust me, in a market like India, that's quite an ambitious target. So we measure metrics like number of silent loans. How many of our customers do we never have to speak to, ever? And this has always been the focus from day one. And we had to bring technology and obviously an obsession with data across the entire platform. And I hope that today we can touch on that, not just underwriting, credit scoring, and fraud, which are very obvious. And I think in every market we have had to all crack those models. But how do you also acquire a customer efficiently, service a customer efficiently? And in a market like India with extremely challenging infrastructure, how do you collect from him efficiently, at scale, and low margin?
And funnily enough, I mean, Matthias operates in a very, very different market, Germany, SMEs, but has come to the same conclusion, isn't it, Matthias?
Yes, I think I would completely subscribe to what Lizzie just said. Automation is also key for my company. When we founded this company, we set out the maxim that we said we don't want to have a human underwriting department, and we want to have as little as possible people in operations functions, because this is what really hinders scalability when you really want to grow, when you want to attack a market segment which is very, very fragmented. You cannot just scale the business without then adding the heads and the noses to it. So that's why we said completely automated platform straight from the beginning. And this is for me not just in credit scoring, this is one part. But another part is fraud detection, fraud management. And the third part is actually KYC and AML. When I want to lend to companies, at least in Germany and across Europe, you need to identify them, identify the ultimate beneficiary owners behind them, do the PEP and sanction list checks and all the different things which you then need to archive for the regulator. And all of these things, from my perspective, have to be automated. It's a lot of work to do that, but I think it definitely pays off long term.